What's up, security token market? We are excited to continue our educational series with Arca, a leading blockchain-focused asset management firm, with our third episode of our six-part video series titled Tokenization for Institutions, What You Need to Know. The goal of this series is to usher in the tokenization playbook to institutions across the map, as tokenization is one of the more under-the-radar verticals within digital assets today. In the last episode, we discussed regulation and adoption with Annalise Osborne, head of institutional at Arca. In this episode, we're joined by none other than Arca's own veteran Chief Investment Officer, Jeff Dorman. Thanks for coming on, Jeff. I'm also joined here today with Peter Gaffney, Head of Research at Security Token Advisors. So why don't we all introduce ourselves and we'll get into it. I'll kick it off. I'm Jonah Schulman, Head of Communications at Security Token Market. We are a leading provider of security token data and research. We track over 200 plus tokenized assets, totaling over $18 billion in market cap. In fact, the market cap was approximately only $1 billion at the start of the year. So it's been amazing to watch the secondary market exponentially rise. And if you want to learn more and track these assets, head to stm.co. Peter.
Awesome, thanks, Jonah. And I'm Peter Gaffney, Head of Research at Security Token Advisors, the consulting and advisory arm of the company. We actually help advise clients on tokenizing their own assets. That's ranging from real estate portfolios and funds and assets to private equity and venture capital interests to pre-IPO shares and more as they come onto our radar. Very unique cases coming up. We also serve as the midpoint between a lot of industry players in the industry, vendors themselves, anything we can do to create a more robust system and landscape, one of which today we're actually joined with. I would love to hear from you, Jeff, and what you're working on at Arca, please.
Sure, and thanks again for having me, guys. So Jeff Dorman, Chief Investment Officer and one of the co-founders at Arca. I'm a 20-year veteran of markets and FinTech, was an investment banker early in my career, was a bond trader, investment grade, down to high-yield distressed corporates, worked on the sell side and the buy side, investing across debt and equity prior to getting into FinTech and ultimately into digital assets about 6 years ago. Arca is a full-service investment management firm, dedicated solely to digital assets. We have multiple different fund strategies, everything from liquid token investing using fundamental research to yield products, taking advantage of some of the yields offered in the space, to niche products like early-stage venture investing, as well as even an NFT fund. But we also have outside the asset management arm, we also have a labs division, which is trying to innovate using digital assets and blockchain as the wrapper. I think we'll get into this, but one of the first things we created was the first ever blockchain transferred fund, or BTF, which intentionally mimics the ETF because it's exactly the same structure in terms of a 1940 Act bankruptcy remote product. The only difference is the shares are exclusively traded as tokens that trade peer-to-peer rather than the traditional exchange traded funds that are out there today. So doing a lot of innovation on that side and ultimately just trying to meet different institutional investors and companies' needs with regard to blockchain.
That's awesome, Jeff. That's fantastic. And really, it's great to have you on here for episode 3. I've been a longtime reader of That's Our Two Satoshis, your newsletter, and I know you guys spun that out into a full blog piece and all that. Really respect the views at the intersection of both traditional finance and digital assets. So I think something easy to kind of hop into here for all our viewers is I would love to hear a bit more about the taxonomy that Arca created. I think earlier this year, I'm sure it's been in the works for years, really. But I think if you want to break that down a bit to get give everyone a sense of where digital asset securities kind of fit in that landscape, that would be fantastic.
Yeah, sure. It's funny. I was actually just having a conversation minutes ago with one of the OTC quote unquote brokers in this space, talking about the exact same thing, right? And a lot of about our taxonomy, because a lot of this stems from what I think is just misinformation that gets thrown around out there, right? Even something simple like the term alts, right? A lot of people describe the digital asset market as Bitcoin or Ethereum and then the alts. And it's such a damaging narrative. One, because it's completely inaccurate, but two, because it just acts as if blockchain was only meant to have one or two purposes, and therefore everything else is either not accurate or not ever possible to be built on. And a lot of people compare digital assets, of course, to commodities or to currencies or even in some cases equities. But the reality is this market is really much more like the fixed income market, right? Fixed income is a massive, massive market. And Books written about understanding fixed income valuations and different types of fixed income securities are in the 1,500 to 2,000 pages long for a good reason, right? You have completely different issuer types, from govies to munis to corporates. You have completely different ratings, from AAA down to high yield distressed. You have totally different bond structures, from callables to puttables to convertibles, preferreds. Some have warrants attached. You have different parts of the cap structure, from senior secured to unsecured and subordinated. You have different covenants, right, in terms of what a bond issuer can do. And that's really what the digital asset market is becoming, right, is that the blockchain itself is just the wrapper, almost in the same way that the ETF is a wrapper, right? The first ETF was spiders, of course, S&P 500, but now there's, tens of thousands of ETFs that all, can wrap anything, right? You have different sector ETFs, you have equity ETFs, bond ETFs, commodity ETFs, currency ETFs. That's really how we see blockchain, is that it's not even an asset class at this point. It's just a structure that can house all asset classes. So as a result, you have to start thinking much more beyond what its initial use case was of just Bitcoin and cryptocurrency. And you have to start thinking, okay, like, where are we now? And also, more importantly, where are we headed? So the way we broke it down, and we actually wrote a pretty nice paper and one-pager about this that you can check out on our website at ar.ca. But first you have to think about, okay, who are the issuers in digital assets, right? Who can actually issue a token? And to start with, you have individuals, right? Any individual can issue a token. We've seen it, right? NBA player Spencer Dinwiddie issued a token, loosely tied to the revenues of his NBA contract.
Right. That token too.
Yeah, exactly, right? You have governments who can issue tokens, right? Whether we get to CBDCs or not, but clearly there's going to be government tokens. You have companies that are issuing tokens, right? From Binance to FTX to Bitfinex to Axie Infinity. You have organizations that are either issuing or going to issue tokens, right? From Miami Coin to New York City Coin. I believe eventually we'll have universities issuing tokens. You'll have Harvard Coin, you'll have Duke Coin. I think every municipality will issue a token. You'll have, tokens that are, funding parks and things like that. And then, of course, you have DAOs, whether they're real DAOs or not. Sometimes we throw around the term decentralized autonomous organization. They're just organizations. But the idea of a DAO, at least, is a type of an issuer. And then, of course, you have, protocols and platforms, right? Your Ethereums, your, Algorand, Solanas, and stuff like that. So there's a huge diversity in terms of just who is issuing a token before you even, of course, get into, well, what types of tokens are there now? Well, great. Currency is what everyone talks about because Bitcoin is the largest. But a currency itself is just one type of a token, right? You also have asset-backed tokens that are actually backed by a real hard asset. Nexus Mutual is a good example of that. Nexus Mutual is an insurance company, a DAO doing insurance that has a token that is fully backed by the capital pool of that insurance entity. Also, our own Rcoin, which we'll talk about, which is the first product under our BTF umbrella, the Blockchain Transfer Fund. But Rcoin is just a token that is fully backed by government, U.S. government bonds. So that's a completely different use case of a blockchain token than a currency. And then you have what we loosely describe as like pass-through tokens. Tokens that basically pass through some value, either in the form of financial value, meaning like Binance Coin or FTX, which actually pass through revenues and profits of their business, or like SushiSwap, who actually passes through a real dividend. But you also have the tokens that pass through some sort of utility or value, right? Some sort of actually member or a reward for being a part of an ecosystem, right? Getting to use it for discounts, getting to use it for loyalty points. These are just completely different use cases than just cryptocurrency, right? This has nothing to do with store of value or medium of exchange. It just is an entity that has some form of value that can be transferred because of the nature of blockchain. And then, of course, going further, you can go even further to where we're headed, right? Eventually, stocks are going to be tokenized, right? Bonds are going to be tokenized. Real estate's going to be tokenized. Commodities are going to be tokenized. And all of these will fit into that taxonomy somewhere, right? It's a centralized entity or it's a non-centralized entity. It's is it a government? Is it an organization? Is it a company? Is it a pass-through token or an asset-backed token? And then, of course, you get into all the different sectors, right? From gaming to NFTs to CeFi and DeFi and Web3. And there's just so much to unpack here that I just think it's, one, wrong, and two, just irresponsible to continue down this path of blockchain is a cryptocurrency and that's the only use case.
Awesome. No, I totally agree. I think the taxonomy that you guys have developed is fantastic. And, it's a technology overlay. Like we always say, blockchain is just the new tech overlay. It's not an asset class in its own. It's going to kind of revolutionize and shape the capital markets going forward. I think an important distinction people don't realize is with, let's say, digital asset securities or security tokens specifically, it's just because the underlying blockchain, whether it's Avalanche, Ethereum, Tezos, Algorand, if that's moving around, it doesn't really have a true effect on the price of a secured token per se, right? The company, it's the asset that's backing it that really has the value driver there. So that's an important distinction to make. And that's kind of what the taxonomy that you guys developed is doing. I love what you said about the fixed income markets and kind of analogy there. I think I'm gonna have some more on that later. But one thing I know Jonah and I are both very curious about, and you write about it a lot, that like every company will have a token, right? I think you've mentioned Netflix before, you mentioned Amazon and the Amazon Prime memberships and everything. And when we're talking about security tokens, we usually default to like, the real estate piece that's commonly touted, or money market funds. Looking at something like Rcoin for collateral management, treasury management, all good stuff. I love looking at, pre-IPO shares, just to give early investors more access into these companies before they go public on the retail level. And that's all great, but I would love to hear what you think about when you're looking at company tokens. Would those be securities? Would they be utilities? Could be a blend, any clarity would be awesome.
Yeah, I mean, it's funny you ended that with the word clarity, right? Because I think that's obviously, at least here in the US, that's what's completely missing. Even the word security token, right? I think we all understand the meaning of when we say security token, we mean something that is obviously already viewed in the eyes of the US regulators as a security, that if you bring that onto blockchain, right, stocks, exactly, that you're thinking that that's an obvious security. But you go outside the US and it's already pretty blurry in terms of what would be deemed a security or not. The difference is in the US, nobody will even push that envelope because they're so afraid of the SEC, so you won't even see experimentation. But outside of the US and in Europe and Asia and South America, you do see companies issuing tokens that it's not crystal clear whether they would be viewed as securities or not, right? I mentioned these pass-through tokens, or really maybe a better word for it is hybrid tokens, right? If you have a token that is giving you some sort of financial upside, right? You're getting a piece of the upside revenue or profits of the business. I think it's pretty clear that there is a security component to that. But if that same token is used, to give you access to something on their platform or to give you a discount or something like that, that's not a security, right? I mean, that's just a membership, reward program. That's like a coupon. That's a discount. That's a loyalty program. But when this token represents both at the same time, I don't really know how the regulators are going to view that. Meaning, like, let's take Amazon as an example. Amazon Prime is clearly your member benefits, right? Everybody has an Amazon Prime account. Amazon Shares is clearly the security, the financial upside to the growth of Amazon. It's very easy to distinguish the two, and they're really mutually exclusive right now, right? You can be an Amazon Prime member without being a shareholder, and you can be a shareholder without being an Amazon Prime member. But in the token world, that exact same dynamic exists, but it's one token, and it represents both at the same time, right? I mentioned Binance Coin, for example. The Binance Coin gives you, they take 20% of their profits roughly, and they buy back tokens. That is no different than Amazon shares, right? They're taking profits and they're distributing it to token holders or shareholders. But at the same time, if you own that BNB token, you get discounts when you trade on Binance. You get access to new tokens that they bring to the Binance platform. You get discounts with Travala and other companies that they partner with across Asia. That's no different than Amazon Prime, which started with just free shipping, but then they just keep adding benefits to it, like Whole Foods discounts and movies and music. I don't really know if that token is supposed to be a security or not. It has security-like features, but it also has very unsecurity-like features. So I think it's really difficult to even just label something as a security because we've early on in the early days of digital assets, we've decided that some things are securities and some aren't. But where we're headed is companies like Binance and FTX and Bitfinex and Axie Infinity, name it, like they've created the roadmap for whatever other company is going to do. Like I've been using Disney recently as an example because Raoul Paul and I were talking about, and he brought it up and I thought it was brilliant. It's like, Disney has a couple $100 billion equity market cap, I believe. If Disney issued a token tomorrow, that token would likely have a higher market cap than their equity because that token would give you discounts to Disney Plus. It would give you fast track, a fast pass at the parks. It would give you maybe exclusive, sneak peeks on certain content that they have. It might give you access to Disney's show. I mean, think about all that Disney has as a company and all these things that could be unlocked if Disney were to issue a token. And again, maybe they even say, we'll give 10% of the revenue of Disney off the top line directly to you as token holders, because we want all of our customers to also be financially aligned with the success of Disney. And that's really where I think that tokens are so interesting, is that coordination, that stakeholder alignment, where you're no longer just a passive user of a company, you're also financially and incentivized to see that company's success. So when you think about it that way, it's like, this is such a no-brainer. And then, Disney absolutely should be doing this, right? It's non-dilutive capital. They get to book, upfront revenue, and they get to empower their customer base to feel their success. But again, I don't know if that token would be a security or not, right? Again, it has security-like features, but it's not exclusively a security when you have all this utility value that comes with the use case of that token. And you start thinking beyond that, and you're like, this is just the greatest capital formation and customer bootstrapping mechanism we've ever seen, because how many things in your daily life do you use as a user or a customer that you have absolutely no
upside
at all, and no cares really of the success of the business? I mean, take Netflix, for example, right? We all have a Netflix subscription. I could care less if Netflix went away tomorrow. What do I care? I'm not Netflix shareholders. I don't care if it goes away. I'll go do Amazon Prime and Hulu and everywhere else, right? Disney Plus to get content. There's absolutely no brand loyalty or customer loyalty if you're not financially incentivized to see it succeed. And it goes way beyond, Fortune 500 companies. Think about, your local bodega who, you get a deli sandwich from once a week, or the place you get your hair cut, or I have 2 young kids. I can tell you every Saturday and Sunday, I do a bunch of random things with my kids that I have no financial incentive or upside to. I get nothing out of it. And then on the flip side, I've been a Starbucks shareholder for 20 years. I've literally never had a cup of coffee in my life. The only time I ever use Starbucks is to steal their Wi-Fi or to use their bathroom. So I get no utility value at all from Starbucks, but I get financial upside. Starbucks gets absolutely nothing from me because I'm not a customer. Like, there is such massive misalignment there between customer and stakeholder that it just makes no sense. So I think that's where we're headed. And I think, as much as the success you mentioned earlier about the growth of the STO market, the security token market, and where we're headed, the reality is the security token market, in my opinion, is being held back by the fact that there just hasn't been a mind-blowing product yet that everybody has to own. Like, if Disney issued a token tomorrow and said, it is a security, we went through the SEC registration process, it is a security, and we're issuing it, guess what? The security token market would 10x overnight, because everybody would want to buy that token. But when you have an LP interest in some small, obscure hedge fund just tokenizing the shares of their fund, nobody really cares about that, right? If you tokenize some $40 million hotel in Denver and, cool, it's nice, it's a great experiment, but nobody cares about that. You need to tokenize something that people care about. You need something that people feel like they have to own, right? Like, if you tokenize the Mona Lisa, right? Or you tokenize the Titanic, or you tokenize, Amazon shares, that's something that people feel like they have to own, and they will figure out how to own it. And that's the big disconnect, in my opinion, is there's a lot of cute experimentation going on. There's a lot of groundwork being laid right now that will eventually be the reason that the security token market is huge. But you just haven't had that no-brainer product yet that people are like, I got to figure out how to own an STO because I'm not missing out on this.
Right. I think you made some good points there. And I think the overarching theme is this technology is pervasive, and it's extremely flexible and creative and super in depth and super breadth in terms of like the use cases that you can leverage using blockchain, because it opens up the floodgates of opportunities, whether it's connecting with customers more or creating liquidity for funds or real estate. And I think there's some really cool projects there, but I also think there's some massive catalysts that are going to come. And I think part of it is what you're saying is that there's no clarity really in the US. I mean, you have the BTF model like Arcoin that has been the exact model of an ETF, but you add a technology overlay on top of it. I think that's huge, but I think we need exact clarity for these institutions of what you can and can't do to enter that gray area, as well as there's some pretty cool catalysts that are coming out. For example, Opulus. Have you heard of Opulus? Is doing these security tokens via RegCF, a pretty big artist by the name of Kyle and Tyga and Little Pump have been able to bring in thousands of investors to tokenize securities. So I think if you create, like you're saying with Netflix and Peloton in your article, do mainstream issuances, you'll bring in those people. I also think that there is a really potential huge catalyst coming, and Gemini has been approved. I believe their BDATS is Gemini Galactic Markets, approved to trade digital asset securities. As we know, Gemini is a private company. I think that would be so cool to see the Winklevi literally issue a tokenized equity of Gemini and then start trading on their ATS to bring in thousands, if not millions of people instantly overnight.
Yeah, and that's actually April of last year when Coinbase IPO'd, I actually was very adamantly upset about why they didn't do a tokenized stock offer, because this was one of the hottest IPOs. Granted, it's done horrifically since coming, right? I mean, it's down 80%, but at the time, it was one of the hottest IPOs. They had an obligation as a leader of this industry, in my opinion, to do that and to expand the boundaries in terms of what that is. Be like, look, if you want to own the tokenized stock of one of the hottest companies at the time in blockchain, you're going to have to figure out how to do it. You're going to have to figure out how to own a token. You're going to have to figure out how to, get a wallet or custody it. You're going to have to figure out how to trade on one of these ATSs. Like, that is the kind of company and leadership that you need in the blockchain space, to say, like, again, we are going to be a leader. This is what we're going to do. And if you want to own it, this is how you have to learn how to own it. And I think you do need some of those pioneers. I hope Gemini does it. And I hope Gemini is a big enough name and brand and company to I'm not 100% sure Gemini matters enough to pull that off as much as Coinbase did. Sure. But I hope they try.
What's interesting about that is, I don't know. I was doing some research on this. I'm not sure if this ever fully came to fruition, but there was a point in time where they acquired a BD ATS, or they have that license still under their belt. And I have this theory that, there's SEC regulation is coming. There was that class action lawsuit of, I think, like 74, 79 cryptos on Coinbase that were seen as unregistered securities. There could be a point in time where Coinbase is thinking ahead. They're clearly aware of, regulation and tokenization and security tokens, where if any of those cryptos traded on Coinbase are deemed illegal or unregistered securities, they could hypothetically just put it on the ATS and have it trade there. If you still own that crypto or you still want to trade it, you would just move on to that specific platform.
Yeah, I mean, look, the reality is, like, the world we need to head to, which I think is going to be so cool and so powerful, is when all of your assets are represented in a token form, right? Like, think about, first of all, I can't think of an industry that everybody hates more than banking, in the sense that nobody is happy with their bank. It's annoying. You got to jump through all these hoops to get access to your own money. Most of us, at least in the digital asset industry, have at some point had our bank, frozen or suspended because of some transaction that they deemed, crazy. It is a horrific experience. Not to mention, with inflation, there's zero reason to ever own cash in the first place, right? The only reason anybody owns cash is for liquidity. So all of a sudden you think about it, like, well, wait a minute. We now have the technology to turn every single ownable asset into a spendable asset, right? We're bridging the gap between investment and payment vehicle into one thing. When you think about that, it's like, well, why in the world would anybody ever own cash again if you can spend your investments, right? Think about the inequality in the world is because people can't actually invest because they have no ability to, because they need to, make payments. They need to have that cash on hand. Well, if you could just invest 100% of your money at all times, but still use that money anytime you need it, you get to a world where it's like, okay, well, we don't ever have to own cash. I can own, 20% of my net worth in a house, and 20% in Bitcoin or Ethereum, and 20% in stocks, and 20% in, whatever else. And all of a sudden you're like, oh, well, I got to make a, payment. Well, here you go. Just pro rata, take it out of all of my investments, right? Because I can just spend anything at any time, right? And then you start thinking about, think about where the NFT market is going to go, right? You're going to have an NFT representation of your jewelry, of your car, of, your deed to your house. And all of a sudden this becomes an asset that you can, in theory, have a liquid market for and be able to spend. So, that's the perfect world. And it's actually, embarrassing and frustrating that everybody is so afraid of the regulators and what the SEC is going to do, simply because they haven't provided any clarity, that a lot of these things that, in my opinion, seem absolutely inevitable are simply being delayed because of the fact that we can't figure out where this stuff fits. And it's really frustrating because, again, I can give you thousands of real world examples of like how that would work. In fact, I've told this story many times. I think it's the most powerful. Is like, I have a neighbor who was a big real estate investor. And our kids were playing outside, and he got a call from someone like a Saturday saying like, hey, there's this property in Hawaii. It's going to go fast. You do want to get in on it? And after he got on the phone, he was like, well, this sucks. And I was like, why? He's like, well, I don't have any liquid cash right now. And this property is going to go fast. And he's like, I have to wait till Monday morning to sell some stock. I have to wait T+1 for that stock to settle at my brokerage account. I have to wait, T+1 to send that from the brokerage account to
yeah,
the bank
imagine
account.
if Monday was a holiday as well.
Yeah, exactly. All right. And then you got to wire the money, which is going to take, anywhere from, 1 to 3 days. He's like, it's Thursday or Friday at the earliest that I could even get money there for this property. Whereas like, if you really get to where we're headed, it's like, oh, okay, I can make you a payment in T plus 10 minutes because I'll send I can send my tokenized Tesla equity, or I can send, my digital asset, or I can send my, a piece of the equity in my house, whatever. Right. And it's just like, it just makes so much more sense that it's really frustrating that so much of this is being held back, not by innovation, but by the fear of what happens to you if you innovate.
Yeah, right. And I think that was one of the coolest pieces about the BTF model, like that Arcoin's built on, is that you don't have to settle funds in cash or in something and then buy a new fund. You can just swap them out, right? I mean, that's kind of what you're saying in the future. If you have everything tokenized, you don't necessarily need to settle in cash if you're comfortable swapping products specifically.
Absolutely. And that was, look, we went through the process with the SEC for almost 2.5 years in terms of getting exemptive relief for this product, right? And for those not familiar, the SEC doesn't really say like, yes, we approve a product. It basically just stops saying, no, we don't approve it. And eventually okay, you're free to go. But it took us like 2.5 years to get through that process to get exemptive release. And when we issued the first blockchain transferred fund, we tried to do the most basic boring product in the world, which is, short duration US treasuries, because it's the most liquid, most safe instrument in the world. It's the most, adopted instrument in the world. You could argue that treasuries and Bitcoin are probably the only truly like global, ubiquitous, liquid market, right? Where everybody in the world has some sort of, interest or exposure to it. So treasuries was like, okay, let's put these treasuries into a trust, right? That's how an ETF or a BTF works, right? Is you basically put the assets in a trust, and then you have shares that represent your interest in that trust. Right. Those shares can trade on an exchange like an ETF, or they can trade as a token like our BTFs. But when you trade the Arcoin token, you are effectively just transferring the interest in this trust that is fully, backed by these treasury assets. So you think about something like the treasury market, like most of the world runs on the treasury market, right? From, settlement to, trading, et cetera. This still is a T+1 market, right? So much of finance is based on the fact that you do a trade and you got to wait at least T+1 or T+2 or T+3 to settle it. Now you can do it instantaneously or T plus 10 minutes, depending on which blockchain you're using and how fast it takes to send it. But that's a huge win for finance companies as well as just regular treasury management for any company to be able to have an instrument like that. So, as we know, it's still early. And ultimately there'll be other products within our BTF library besides just government bonds. We'll have anything that can be anything that you can put into a trust. Effectively, we will eventually have a BTF for one day, but it's you have to get these companies and projects and in finance and insurance and in regular corporate America and beyond to understand how important it is to have something like this that is a tier 1 capital that's viewed as the most highly rated capital in the world to be able to instantly settle. So we'll get there as an industry, we'll get there as a company, we'll get there as a product and stuff. But again, a lot of this is being held back by not necessarily our product, but by these ATSs and other products that are on there, right? You have to get people who care about being on an ATS to trade this, or you have to loosen the rules to let things like Bitcoin, Ethereum, and BNB trade on the exact same place as something like the security interest in the tokenized security interest in a hotel, or the tokenized interest in as an LP in a fund, or a BTF like Arca.
As a final thought on this specific subject on my end, we get a lot of prospective clients and clients looking to issue like investment DAOs or NFTs with revenue share, profit share through royalties, all that. The default is that, hey, this is partially a security. We have to at least abide by that. And it's always like, you're kind of saying, Jeff, there's kind of an inhibiting factor that slows the growth. Now, all I'm thinking about after this conversation is the company token model and what we can really do. The future is hybrid, that's obvious. So there's always gonna be a 1-2 punch with like security token and utility token, but I'm thinking about now, how do we combine that into one? And it kind of seems like the company token model that we were just talking about is the solution right there. So that'll be extremely interesting to see how that comes to fruition in conjunction with everything else happening. So that has my wheels turning. I'm sure after this call, I'll be doing some diligence on that and figuring out how to implement that a bit more. So excited for more on that. But So far, so good.
Yeah, and I'm excited about it too. Like I laugh all the time because as a former bond investor, I've traded a lot of airline bonds, right? And the airline industry is one of the dumbest industries in the world, right? They all go bankrupt every 7 years. Somehow they continue to get capitalized, right? There's no reason for these to be. There's no reason for these to be public companies, right? They should be nationalized because they're doing a service for the world. But yet somehow they're still private companies and public companies and have equity, and then they go bankrupt and start over. There's no industry in the world that has more of their assets encumbered, right? They have, debt on every single plane. They're now, I remember it was United or Delta a few years ago, we're like, hey, now we should issue debt backed by our loyalty points. And I'm like, oh my God, this is the dumbest thing ever. You already have so much debt on your balance sheet and you already have all of your assets encumbered. And here you have an opportunity to issue a token that is basically your Delta Sky Miles or your United points, but have it also, have all these other unique features and this creativity that you can use. And instead of having debt and more encumbered assets, you can actually make this non-dilutive capital and do it the right way and empower your customers. I mean, think about like if you live in Atlanta, right, and all you ever do is fly Delta, and then all of a sudden you move to Houston and now you're going to have to fly United all the time. It's like, that's terrible, right? Your Delta miles are just dead. You're never going to use them again and they're dead and you have to start. It's like, well, how about being able to exchange those, very easily, because this is a tokenized asset and you can sell them for Bitcoin or you can trade them for, United miles. And it's like, we're locked into these mini ecosystems, even though we now have the technology and the ability to no longer be locked in. And it's in everyone's best interest to do it, but nobody wants to be first. And nobody wants to be first largely because they have no idea what to do with it. Even if you look at the pioneers who have done it, I think it was Stacks was the first one, and then was it INX was the other one who issued, tokenized stock. And it's like if you actually read the prospectus of those offerings, they're completely guessing, right? They're like, first of all, they issued, an S1 and a prospectus, which means it's a security offering. But if you actually read the document, they're saying we're basically just booking this as upfront revenue because it's a token that is essentially like selling forward a future service in our business. It's like, well, right off the bat, like, well, that makes no sense. Why are we doing a securities filing in a shelf to issue a security, but booking it as revenue? That doesn't make any sense, right? So, but they're not getting any leadership or guidance from the regulators. They're just guessing in terms of like, how is this going to fit from an accounting standpoint? How is this going to fit from a regulation standpoint? And it's great to see it. Like, I applaud Stacks and I applaud INX for trying it, but it's like, if we're all just guessing anyway, then somebody who's well capitalized needs to be like, all right, I'm just going to do it, and we'll eat it, and we'll take the legal pain that comes with the 3-year process, and like everything in the court system, it's usually there's no clear-cut answer until you have precedent, right? Somebody has to win or lose a court case and make precedent, and then that precedent gets followed forever. I think somebody just has to do that. Somebody big and powerful and important that actually people care about is going to have to go through this and do it. And then once it happens once, every company in the world is going to do it. Like when I mentioned Disney token or Netflix token or Starbucks token or Delta token, there's not a single investor in the world, and I've spoken to a lot of them from pensions to endowments, et cetera, who aren't like, yeah, that makes all the sense in the world. You're absolutely right. That is the future. Bridging investments with payment vehicles is the future. But I don't know who's going to do it first, and I have no idea how they're going to do it, right? And it's like, we got step 1, we got step 3, but nobody has figured out step 2.
Well, I wrote about tokenized loyalty rewards with a mileage focus a few months ago, so I'm glad there's some validation there. That's great. Maybe they'll be the first. Maybe they'll be the first movers. We'll see.
I would love to swap for my American Airline miles if I had another. I mean, why not? Why do I have to be in that closed system? But I think you make some good points. And I think there's some still really bad negative connotation around the technology blockchain. Still from the ICO era, we were recovering from that and all the scam. And then we still have rug pulls today and then the Luna fiasco. What I think people need to understand is that just because it's running on blockchain does not mean it has anything to do with the securities world. It's just the same technology that it's underpinning. Similarly, an analogy could be like with the internet. Ethereum could be a common website, maybe ESPN.com. It runs on the internet, and it could be another analogy of another website that's completely different use case. I don't know, like Facebook, one's for watching statistics and sports, one's for communicating with your friends and family. They both run on the internet. If the ESPN internet goes down, does that mean the Facebook goes down? Not necessarily. They're just completely different use cases. I think what it comes down to is people need to realize that. And I think, as we know, as you mentioned, we need a catalyst. So if we were talking on a low-hanging fruit for an institution who wanted to get in the tokenization realm, what is like the easiest thing that they can do without the fear, without the resistance, without the friction that they could start implementing, appending to their infrastructure? Maybe is it treasury management? Is it collateral management? What can an institution do, start adding and start to move into the tokenization realm that feel comfortable about this future?
Yeah, it's a good question. And before I even answer that, I'll go deeper in what you said, right? I mean, I think the misinformation out there is incredibly damaging, right? Like it's almost like, if every single equity investor in the world had to listen to people talk about GameStop and AMC for 3 months before they were ever allowed to buy another stock, by the end of that, they'd be like, well, I'm never going to buy a stock. This is ridiculous. Why would I ever buy a stock if AMC and GameStop are representative of what the stock market is? And of course, nobody thinks that because we can compartmentalize. We can be like, no, AMC, GameStop are kind of these weird meme coins, and it's not really indicative of the rest of the market. We can talk about them, but let's sort of, let's not get crazy assuming that the rest of the market is like those two stocks. Yet that's exactly what happens in digital assets, right? The first thing they ever hear about is Bitcoin or Dogecoin, and they start assuming that everything in the market is therefore Bitcoin or Dogecoin, and it basically shuts them off for the rest of the market, even though, as you just said, there are entirely different use cases and tokens that have nothing to do with each other. So part of it is just the media is just crushing this industry with the how much they focus on the two tokens that have the least representative of what the rest of the industry is. But part of it also is, the internet was allowed to quietly build without the internet. Meaning like
very true.
Most of the things that broke and didn't work and caused losses and all that stuff weren't like immediately known to everyone in the world through social media. Whereas with this experimentation of blockchain is also being watched and narrated in real time. So it's a little harder for things to just go under the radar and for experimentation to happen. And you get things, I truly believe that Luna was not a Ponzi. It was very transparent with what it was. Now it was experimental, but it was not a Ponzi, right? Like people knew exactly what they were trying to do. But in if you had a internet analogy in the 1990s or early 2000s of Luna, it never would have gotten as big as it did before it collapsed. Part of the reason it got as big as it did is just because there is so much coverage in media and social media and the ability to make something bigger than it's ready for, right? So, things like Luna will fail all the time. They're just generally not supposed to get to 60 billion of assets before they do. Right. So when you think about it that way, it's like, so some of that is just sort of a narrative that you just have no choice to have to fight. Like this is the world we live in with constant 24/7 news and social media, and you just have to live in that misinformation world. But that being said, most people that we talk to who are new, 5 years ago, they had no choice but to listen to Bitcoin and go through Bitcoin to get in, right? Bitcoin was every single person's on-ramp. Now, obviously, there's more on-ramps, right? There's stable coins, there's DeFi, there's gaming, there's, things like the Arcoin BTF. There's ways to get involved in blockchain now without having to go through the traditional way we did, which was Bitcoin. So in terms of how do you do that, right? You have to solve a problem first, right? You can't just say, here's a product, go use it. You have to listen and be like, what are you actually solving for, right? So for example, insurance companies have asset liability mismatches. They have tier one security, tier one capital ratios that they have to deal with. They have to deal with, liquidity and settlement. Like that's a great industry to start teaching about something like an Arcoin or a BTF, which is basically the exact same investment you already are making anyway, but here's a way to settle it faster and to use it as the same exact liquidity capital ratios that you already do, but have much more utility and functionality from it, right? It's going to take years for the insurance industry to figure out how to actually implement it. But that's a natural use case, right? Bank settlement, same thing, right? Banks have to settle assets constantly. Like, regardless of what the public statements by CEOs about Bitcoin, they're all trying to figure out how to actually use blockchain in some way because they get it. They see the writing on the wall that T+2, T+3 make no sense in this day and age. So I think you start to have to solve some of these problems, right? Is it a corporate treasury that has, billions of dollars of cash and assets on their balance sheet that they really can't utilize very quickly? Maybe you go to them and be like, hey, what if you want to make an acquisition on a Saturday, but there's a bidding war and there's 3 companies bidding for the same company, and you can, get the money to them on Saturday afternoon versus someone else who has to wait till Monday. Maybe that's a selling point, right? Or maybe, hey, maybe you need to earn a little bit more of a return on your treasury, but you're worried about liquidity. Well, here's a way to earn a return and have liquidity at the same time. So you start to solve these problems one by one, and I think you can actually start to see some of these companies and projects do it. But there's this real stigma and fear about being first, and that's always the case with new technology. And eventually there will be some company who just says, I'm willing to be first. I'm willing to do it. And you've seen it, right? You've seen it in certain ways, from a MicroStrategy to a Tesla to guys who are putting Bitcoin on the balance sheet. But those aren't really the right companies to necessarily be the leaders, and that might probably not be the right asset to be the one you experiment with, just because it's so volatile. But there will be plenty of case studies in 5 or 10 years of organizations and companies who kind of figure out, I need to solve a problem, blockchain solves a problem, and I'm going to do it quietly, and then eventually I'll tell my story and everyone else will do it too.
Right. I think when it comes down to it, it's not really, blockchain has amazing use cases, but the outcome of using blockchain in some of those initiatives like liquidity management or bank collateral management, et cetera, is there's so much cost savings there and efficiency, after hours, weekends, as you mentioned, that people will follow that. Similar analogy as well is with El Salvador using, adding Bitcoin as legal tender. There's apparently seems like there's a ton of benefits there. And now maybe other countries will follow suit because they were the first, they went through and took that risk and ignored the fear. So I think, banks and other institutions are starting to do that now, and other banks and institutions will see all of the cost savings and the benefits of using blockchain, and then maybe there'll be hopefully a snowball effect. And
you're seeing it too, and I'm not maybe the best person to speak about this because I don't focus on it too much, but you're seeing it in some of the biggest asset managers out there, the guys who have huge securitization businesses, from CLOs to CDOs and stuff like that, where they are, it's a 3-week process to settle a bank loan. Right, 3 weeks. And there's a lot of middlemen and costs that go into that. That is absolutely something that these big asset managers, and I'm talking about the big guys, right? Your Apollos, your Ares, your Blackstones, like the guys who are managing hundreds of billions of dollars, who have huge securitization books. Trust me, they are looking at blockchain, right? And they are looking at ways to figure out, how do we improve this 3-week timely and costly process of settling, a bank debt and bank loans. So, there are people doing it. It's just like, that isn't the splashy story necessarily that, goes viral and, makes it everywhere around the world. So, but it's absolutely happening. I remember when JP Morgan coin was first announced, I remember my first reaction, and this is maybe 2 years ago, right, when they first started talking about it. My first reaction when I was reading about what they were talking about was, how the hell is this doesn't already exist? Like, they were talking about like, oh, this is amazing. We're going to be able to transfer assets between our banks instantaneously. And I'm like, are you telling me that 25 years after the internet allowed me to, have send a 300-page document in 5 minutes around the world, or have a video call with 400 people around the world, where instantaneously you can communicate any way you want for free and boundaryless, that JP Morgan in its own banks can't even figure out how to send something
it's terrible.
Free and timely? I was like, I was, as much as I was excited that someone like JP Morgan was experimenting with their own coin to settle their own transaction, I was floored that we just accept the fact that doesn't already exist. Like, how can a company within its own walls not be able to do this already in this day and age? So, in that way, it's inevitable, but it's also like just amazing to me that this hasn't already been just adopted everywhere.
Definitely. I mean, and even at the time JPM coin was announced, maybe 2019 or 2020, around then, I think everyone, myself included, honestly thought it was a product, like a new digital asset or a new crypto trying to become the new, decentralized payments, whatever. But it's not. Obviously, it kind of acts as their settlement coin, like you said, Jeff. And even their Onyx, their repo, blockchain-based repo initiatives are doing pretty well, 300 billion in volume in just about 18 months or so. That's very impressive. I think that's a great institutional case right there. Have some major banks hopping in. Would love to see more hop in on that and kind of build, the reputation there. I think it also plays into Rcoin's role as collateral management. I think it's all kind of pushing the tide forward in conjunction, which is, fantastic. I'm not sure you've been keeping up with that front, but I think, it's kind of been catching my eye lately from their end.
Well, yeah. I mean, look, the reality is, like, you've seen the parallel to this before, right? There was the intranet and there was the internet, right? The intranet was these private closed systems that, I'm an old guy. I was in college in the, late 90s, early 2000s. Like, we had our intranet, right? And it was like, that's all you use. And it was like really weird to go beyond the internet into the internet and see what other schools were doing and other people were doing. So that JP Morgan coin is effectively the intranet, right? Something like our coin could eventually be the internet, right? Where it's like, you can use JP Morgan coin all you want inside of JP Morgan, but guess what? Bank of America is probably not using it, and Wells Fargo is probably not using it, right? Like, these guys are not going to be, just adopting the other bank's internal system. So at some point, you still are going to need something outside of that system. So maybe JP Morgan coin runs everything through JP Morgan, and maybe Wells Fargo coin runs everything through Wells Fargo. But essentially, when they have to settle outside of that, they use something like our coin, right? So, there is everything in this space, regardless of whether it works or not, is awesome, right? It's awesome to see the experimentation. It's awesome to see, all of these different leaders kind of trying to figure out how to use blockchain in some way, shape, or form. But ultimately, you do need some bigger tokens, some bigger projects to basically be interoperable and be kind of that, transcendent thing that everybody's just using. And that's likely not to be, driven by a private company, right? It's going to be something, much more bigger and less, corporate focused.
Awesome. And like you said, our coin could be the borderless version of all these things. So excited for more. I have one kind of open-ended question. We mentioned earlier fixed income is going to come back here. Given your background, given your time, you're earlier in your career, and everything I'm reading right now, The Bond King by Mary Childs, about Bill Gross at PIMCO. Throughout the 2000s, 05, 06, 07, 08, 09. Very interesting. I'm kind of getting more clarity on that. I would love to hear your opinion on this. Would tokenization of all these bonds, these debt products, would that ease recessionary activity or downturns, given the liquidity, given the lack of liquidity premiums if people had the fire sale, or would it kind of be a negative feedback loop that makes it easier for people to dump and kind of push prices down more? I would love to hear clarity on that. It's something I've been going back and forth on, reading this and kind of bringing it to the tokenization space and figuring out how things would be if, tokenization was around back in 08, let's call it.
Yeah, I mean, there's I think one misconception about tokenization is that just because you tokenize something immediately, it's going to be more liquid, right?
You need the market, of course, yeah.
Right. I mean, there's no question that it allows it to be more liquid, but you still do need the market makers. You still do need the interest on both sides, right? It's the equivalent of like, I could create eBay tomorrow, right? But it's not going to work if I don't have all the different, right? You still need to have all the buyers and all the sellers to make it work. So, tokenizing by itself doesn't just create liquidity. However, ultimately, when you do have everybody operating on the same rails, it does increase liquidity. So, take the bond market, for example, right? Whether it's corporate bonds or government bonds, it is definitely less liquid, of course, than, your equities and your commodities and your currencies. Sometimes that's a good thing, right? Sometimes it's not a bad thing that, you have to shop a big block and have to kind of wait for a big buyer to show up. Sometimes it's terrible, right? You want to see that liquidity. You want to be able to get bigger in something, because you know that you can get out of it if you have to. I think that there's been plenty of technological advancements outside of blockchain trying to address the liquidity in the bond market. For example, it's still kind of ridiculous that if PIMCO wants to sell a bond and BlackRock wants to buy one, they're basically at the mercy of 60 different fragmented broker dealers to see, PIMCO might be trying to sell it to JP Morgan and Goldman might be trying to sell it to BlackRock, and for some reason Goldman and JP Morgan just don't match up, and you have this completely inefficient, illiquid thing where Goldman is bidding higher than JP Morgan's offering, and it just doesn't match up for a few days for whatever reason. And of course, that makes no sense. So there's been projects and companies that have been trying to figure that out. Like, why can't BlackRock just go directly to PIMCO, and why can't they just match in a dark pool where you don't know who's selling and who's buying, but for bigger guys they can just match directly? And it's had limited success. It's, there are some of these transactions that happen. You also have companies that have been focusing on like the retail market, right? I don't know if you've ever tried to buy a bond through a Schwab or a Fidelity account, but I used to be a bond trader at Merrill Lynch institutional, right? I remember when my grandmother died, I inherited some of her bonds, and I went to Fidelity to sell a bond, and they were like, okay, your price is 94 cents on the dollar. And I'm like, I am the trader at Merrill Lynch trading this, and I'm telling you it's trading at 99. They're like, well, our bid's 94. And I'm like, actually, sorry, it wasn't even Fidelity. It was actually at Merrill. I was using Merrill's retail brokerage account while I was trading at Merrill, and Merrill basically had to go through me to trade the bond. And I'm telling them I'm bidding 99 for the bond. They're like, yeah, we'll pay you 94. And of course, that's ridiculous, right? Because it's like there's just so many middlemen and so many fees. But the retail market is really big into bonds. People, most retail investors understand a bond more than they understand stock, and they want to get that coupon and they want to buy it. But the industry, the dealers are so fragmented, and the prices are so bad, and it's hard to buy $30,000 of a bond when it typically only trades millions or 5 or 10 millions at a time. So because nobody wants to warehouse that with the balance sheet, nobody wants to warehouse just a $30,000 liquid bond position. So, I think the idea of tokenizing bonds absolutely helps. There's no question. It absolutely helps. But at the same time, it's not just the tokenization. It's that you just need one place where everybody's doing everything, and it just increases liquidity. Like, anytime there's friction in workflow, it slows things down, right? If I have to log into Fidelity to trade some stocks, then I have to log into Coinbase to trade some, Bitcoin, then I have to log into whatever, T0 or whoever to, trade some security tokens. Then I got to go to my bank. It's like, that just sucks, right? It's just a terrible experience when you got to go to 15 different places to do everything. So I really, truly believe we'll have a world one day where you just have all your assets on your phone as blockchain-based assets of some sort, and you can go to one place and do everything. And that one-stop shop, it might be a different one-stop shop for everyone, right? It may not be. It's not like there's going to be a monopoly per se, but that's when liquidity improves, when you can just do everything in one place and it's just easy. So, it's a long grind though, because there's a lot of companies out there who are incentivized to make that not happen because they make all that money on these inefficiencies and the fees. So, I think it's inevitable. I think we'll get there, but I'm not 100% sure that just tokenizing bonds or fixed income itself is the answer to liquidity. I think it's really more, can we get these one-stop shops? Can we make it just easier for everyone to transact?
I know that that is music to Jonah's ears. He's the king of frictionless processes. Talks about it probably 5 times a day.
Yeah,
so you guys are on the same page with that.
100%. Yeah, I think less walled gardens, less fragmented floats. I think that's the sentiment today. Everything is available at the touch of a button, whether you want to order food, whether you want to go from point A to point B, whether you want to watch something. It's on demand, and the financial markets are so behind. But we're moving there, and it's going to be an exciting evolution. As you said, it's definitely inevitable. We're moving that direction. It's just only a matter of time.
Yeah,
and importantly, like before the financial industry was behind because the technology wouldn't allow it to move forward. Right now, we finally have the technology to do it. So now it's more of just, who's incentivized to make it happen? How do we make it happen? Which is a much better place to be in than, there's a problem, but there's no solution. Now there's a problem and a solution. We just have to figure out how to actually make it happen.
Just get them onto the blockchain rails. Once institutions are on the same or compatible blockchain rails, then it could really open up. Then the floodgates could really open up. To your point of frictionless everything and everything in one place, even if it's a handful of different players, if they could at least play together, that's beautiful.
And that's where we all come in. Security token market, providing the data and information people to learn about it. Security token advisors, helping people guide through the space and get on the rails, and Arca creating investment products and leading the way in that realm and educating institutions.
Good pitch.
But thanks. Thanks, Jeff, for coming on. This is awesome. I think it probably about wraps it up. I feel like we literally could talk for years. There's so much to talk about. It's so exciting. But yeah, thanks for coming on. This was super cool and awesome. This is going to be on the Security Token Market YouTube, and I think your guys' YouTube as well. So be sure to follow us on all our relevant social medias and go to ar.ca to learn more about Arca, and as well as stm.co to learn more about Security Token Market. So yeah, thanks for coming on, and see you all next month with another Arca Killer employee.